Welcome into America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates. Securities offered through Peak Brokerage Services, LLC. Advisory services offered through the Retirement Guys Formula. Registered investment advisor. America's Retirement Headquarters, America's Medicare Associates, and the Retirement Guys Formula are separate and independent entities from Peak Brokerage Services, LLC. Thank you so much for joining us today and welcome you into America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker, Curtis Stevens, and Dave Ross, and myself. My name is Chris Swan. 419-794-3030. This is the phone number. That's how you reach out to the team. 419-794-3030. You can also go to the website, arhq.com. Today on the show, why are financial products so complex, how to calm your retirement concerns, and where can you make 5% on your money safely? All of this and more. But before we dive into the education on this week's show, let me check in with the guys. Nolan, Curtis, Dave, glad to be with you. How are we doing today?
We're doing great. So this is Nolan, just enjoying hockey season. So a lot of hockey around the holidays. We've got a couple of tournaments our boys from Anthony Wayne are playing in, and our girls, I should say, as well. We've got a couple awesome female skaters and having a great time. How about you guys?
Got a lot going on, just trying to get ready for Christmas. I'm not as prepared as you are, Nolan. And my daughter, she just joined the varsity bowling team. So I work and we go to bowling tournaments all weekend.
I'm coaching some CYO basketball, and I'm waiting for all of my children to come home from college so we can have a traditional family holiday.
Very exciting time, busy schedules. It sounds like very involved with the community. We appreciate all of you taking time out of the schedule to impart a little insight and wisdom with the listeners out there. Hopefully get them a little more confident as they enter into what should be a very enjoyable phase of their life with the holiday season, being in the midst of it right now, being able to spend more time with family and doing whatever it is they want to in their retirement. So again, thank you so much for joining us. And let's start with this topic, actually. If you look at the markets and the economy and you're unsure of what to do, Wall Street has a new catchphrase for you, and that is T-bill and chill. So far this year, over $38 billion with a B dollars has gone into 1 to 3 month T-bills, currently paying 5.25% to 5.5%. Now, in retirement, we are going to need long and short-term money, but this is really short-term with a lot of maintenance. Is this part of the current retirement planning at America's Retirement Headquarters?
Well, you've been listening to a lot of the segments. We've been talking about how to make every dollar work as hard as possible. Of course, if you're going to move into retirement time, you don't have your luxury of getting up and going to work all the time. So you do need your lazy assets to work for you. So when they talk about that $38 billion that's gone into the 1 to 3 month T-bills, I'm hoping that the overwhelming majority of that has been money that's in non-productive, maybe checking, savings, or other low-interest accounts that can get you up to that 5.5% range. I'll share a story with you. I had met a gentleman. He'd come out to one of our public speaking events that we had did. In fact, this was in October of 2022. And if you go back to that time frame, we know the market was somewhat having a challenge in 2022. Overall, the market ended up pretty sour for 2022. And in October, this gentleman had decided to abandon ship. So talk about T-bill and chill. What he did is he took his equity positions and he got out of the stock market. He moved them over into another traditional fixed investment account. In this case, what he did was put it in a 1-year CD, which, those rates were decent, but they're not as good as what they are right now. The reality is, though, is what he did as part of his planning strategies was completely change the course. And usually if you're going to completely change the course, you can have some pretty painful lessons on that. So if we look back, over the last year or so, what we've seen is most of the major market indexes are up, 20-30%, depends on what index that you look at. And he missed out on all of that recovery because, although he's able to chill in some of the T-bill rates or fixed rates that are out there, he missed all the recovery. So, the caution that I have is if you're an investor and you're looking at your money, these can be good investments to have that short-term money work for you, but be careful about making dramatic changes with your long-term money. In addition to that, I think a couple of pointers that I would give back to our listeners is when you look at the treasurydirect.gov website, that's the website that talks about these T-bills. A treasury bill is an investment that matures in typically, anywhere from 4 weeks to 52 weeks. So to me, again, it tends to be more of a shorter term investment. And if we look at it and what the, inflation numbers are, if we look at what the Federal Reserve is talking about, with their anticipation of interest rates in the future, it could be likely that we could start to see interest rates come down at some point in the future. So there are other investments that you may want to consider locking in for a longer period of time. In fact, our philosophy has not changed, even with interest rates and how they've changed in the last year. If you go online and go to Google and type independent income system, you'll hear again about what our methodology is about building out the portfolio to help you not only survive, but thrive in today's retirement environment. Again, if you go on Google, you look at independent income system, you can figure out, where are there threats, where there's opportunities. And again, this could be an example of where there's an opportunity to put some of your shorter term money to work. But guys, if I ask you, what are the type of advice that you're giving to people when you're taking a look at, where fixed rates are and nowadays in today's environment?
FIAs are a great place to always take a look, but honestly, this T-bill and chill phrase that they've come up with, I personally feel like it's a little misleading. If you have to make a significant financial decision every 1 to 3 months, do you really feel like you're chilling? No, that's a lot of work. That's a lot of labor. So there's a place for those assets, but really you need to think about how you want to manage your money and how much work you're willing to put in, because all we can do is help you along. You're running the ship. We're here to get you where you're going.
I would add to that a lot of people are putting money in these short-term treasuries as a stopgap because the interest rates being offered at their local banks are so low. And so therefore they're seeing this as an opportunity to increase their yield on their, quote, safe money. And I think that's why advisors should be consulted, because we have a lot more arrows in our quiver than what the banks have to offer.
It's one of those situations where, obviously you're going to need to think big picture in your retirement, the 20, 30 years you're going to be spending in retirement, what's going to get you through the distance. So you're going to need some growth potential there. You're also going to need accessibility to money much sooner than that, the money you're going to be needing in the next couple of years. And so getting growth perhaps without the risk of the market is a good way to look. But like you guys said, you hit it on the head, this T-bill and chill. If there's, in fact, a lot of moving parts, a lot of involvement every couple months, that is the opposite of chill. There is a happy medium in there, and it's really going to depend on person to person. The team at America's Retirement Headquarters, they can help you find what is going to work best for you. You just have to take that first step and give them a call and start developing a plan to suit you. Maybe it is using T-bills. Maybe it is using other vehicles, but it really just depends on your risk tolerance, what you're comfortable with, and what you're going to need. Again, your personal circumstances. It all starts with that phone call, 419-794-3030. That's the phone number, 419-794-3030. You can go to arhq.com as well, schedule a time there, and find out more about the independent income system. That is at arhq.com. At the very end of November, Warren Buffett's right-hand man passed away at the age of 99. Billionaire Charlie Munger was the one who inspired Buffett to invest in great companies at decent prices. He was also known for his quote-unquote Mungerisms.
Warren, if people weren't so often wrong, we wouldn't be so rich. If I can be optimistic when I'm nearly dead, surely the rest of you can handle a little inflation.
Charlie's big on lowering expectations.
Absolutely. That's the way I got married. My wife lowered her expectations. I think I've offended enough people.
Right.
Now, Munger preferred simple, understandable investments, saying complexity can often lead to confusion and increased risk. Can the same thing be said about retirement planning, or are there really just too many moving parts involved?
Yeah, I mean, really, when you think about it, you're talking about why are financial investments complex, and, are those good choices? I think that's a great question. It's, been my experience that the more complex things get, the more difficult it is for a consumer to understand really what they own. And ultimately, some of the times the deck of cards becomes stacked against that investor. So it really goes back to education, I think, is important. So those of you that are listening, if there's one thing to write down, I would write this down. And this is the question that you want to ask about your financial accounts is, what is the investment methodology currently being used in your plan? So I'll ask people that, and a lot of times people will look back at me with kind of like deer in headlights look. Mm-hmm. They don't really understand what's being done for their investments, whether it's their 401k, maybe they're working with a financial professional. They don't really understand the plan, and I think that's when the problem can come in. It's not to say that complex problems can't be great solutions as long as somebody understands how they work and the pros and cons. But when you don't understand the methodology of your investment approach, I think that's really where a caution should go up. And so if you are listening and you don't understand what you own, I would say you should call our office, and our office can give you a second opinion. Again, we have a combined nearly 100 years of experience here today talking with you about your financial accounts and, able to help kind of educate you on the pros and cons of what you have and what you would rather know now before something bad happens. A good example of that, I think, Dave, we talked a little bit about this when we were talking about segments for the show, is a couple of years ago, I would have people that would come into my office and they would tell me that, their financial product is going to guarantee them a 6%. And, I know 2 years ago when we looked at where the fixed rate environments were, that there was not investments that guaranteed 6%. Now, we flash forward here at the end of 2023, and there's things like money market accounts, there's bank CDs, there's fixed annuities that are in that 5 to 6% range. But again, I think people were confused on some of the products that are out there, and they didn't really understand, what that financial product was and really what 6% means. There's also some complex products that are out there that I think people, again, they need to, understand what are some of the negatives. And a lot of times it comes down to some of those, if it's too good to be true, it probably is. We also talked about the fact, years ago when we were invading Iraq, how some people believed in some ads that talked about investing in the Iraqi dinar, and they thought they were going to become ultra rich, but it was really, when you're talking about the currency markets, it's a very complex environment that's out there. So to me, some of the most complex products that are difficult to understand are things like variable annuities. It could be things like indexed annuities. It could be the private real estate investment trust. It could be like structured products. Those are just a couple of examples of some complex products that are out there. But Dave, when you're talking with people, what are you giving them as far as advice when they're looking at some of the complexity that we have in our environment and our world?
Well, what I would first say is that when working with me and with anybody here at the Retirement Guys Formula is you're going to need to be continuously educated and re-educated about exactly what it is you own. That's why I think it's so important that you have quarterly, semi-annually, more often than annual meetings, so that as time goes by, you understand the difference and you understand more about exactly what you own. Because these annuities can be very complex, where people think they get a 6% increase on the cash value of that annuity every year, when in essence it's really a 6% increase in the purchasing power of that annuity. When you talk about how the income value versus the actual value of the annuity, that really opens some eyes, and people are starting to realize that maybe they don't understand what it is they own. So our job as professionals is to make sure they do understand how these things work and how they benefit from them.
Well, guys, one of the things that I'm grateful to be able to do for people, and we all do it here. I'm going to use a big fancy financial term. We help people get unstuck. That's what we do. And financial complication is a big deal. And so I help people through mature simplicity at every level that I can. And everybody understands finances on a different level. But if you can make it simple, then you can increase a reduction of stress, right? You can have more consistency. You don't have to rely on me to make your financial decisions, because if you don't know where you're at on the map, you don't know how to get to where you want to be. So it's important that you own your finances and you work with somebody that's willing to hold you by the hand and walk you through it as many times as you need to understand it.
It's a very complicated thing. It can be daunting, the concept of retirement, making sure that all the T's are crossed, all the I's are dotted. It's something that you may not feel like you're equipped to do it alone. The good news is you don't have to do it alone. The team at America's Retirement Headquarters, just by the videos on YouTube, the podcast, the show itself, when you come into the office, they pride themselves on educating you and empowering you to help you make the best decisions going forward with your retirement. Maybe you don't necessarily want to know all the finer details. You just want to make sure that, the money is going to be there and you're going to be okay when it comes time to retire. Maybe you do want to know more. Either way, whatever you're most comfortable with, they will walk you through the process and they will make it as easy to understand as possible. Again, kind of like Charlie Munger, boiling it down. Maybe not quite the wit. No offense, guys. He was definitely a witty guy, but making it as simple to understand for you. But it all starts. You take that first step. 419-794-3030, or go to the website as well, arhq.com. It is the number one concern among retirees and pre-retirees year after year. The number one fear, people planning for retirement running out of money. And while the stats bear that out, some of it might be a fear that the financial industry continues to feed. This is a piece of a TV commercial I saw this week for a company called Empower. It shows a woman at her kitchen table drinking a health shake when her husband asks this.
Do you ever worry we'll live forever?
No, it's literally never crossed my mind.
What if we live to like 100? That's 35 years of being retired. I don't want to outlive our money, and I've been eating all these stupid chia seeds. I could totally live to be 100. Why do I keep taking such good care of myself?
Since we started working with Empower, we're able to get all our financial questions answered, so we don't have to worry.
Do you see people come into your office out of fear, and then what is that like? Are you able to calm them down once you do the numbers, you do the hard math on their retirement?
Well, I think that the fear of outliving your income is definitely a concern for retirees. I mean, the reality is, moving into retirement time is something new. And anytime you're going to do something different than you're not used to, it is a little bit challenging. The first time that I got up and spoke in front of an audience of people, it was, fearful. I've had a lot of great guests like you guys come on the show, and a couple of them, were fearful of getting on the radio and talking, but you get used to it after you've done some planning, done some research. Our job is to take fear and turn it into freedom for the clients that we work with. And, if you have that fear, I'd say first and foremost from this segment, pick up the phone, give us a call, reach out to us. 419-794-3030 is how you get a hold of us. Let's have the conversation and talk about what are some of those concerns that you have. And we'll talk about how to calm the retirement concerns that you have. And really what my experience would tell you is that through a planning process that is a comprehensive planning process, the role of a financial advisor can take that fear and turn it into freedom. So things that, we're going to do is we're going to look at your financial planning. We're going to take a comprehensive financial analysis of your current financial situation, looking at things like your assets, your liabilities, your income, your expenses, your goals, develop that retirement plan that allows you to live the lifestyle that you dreamed of, or at least allow you to know what is realistic of what your retirement looks like. The second thing that we're going to do is in retirement, all roads lead to income. We're going to work on creating a written retirement income plan. So you might have some type of financial plan. Maybe it's when you log into your 401k, it gives you some projections. It could be things like, you've had a financial plan developed by somebody else. But a written retirement income plan is talking about creating a sustainable retirement income strategy that ensures that you have enough reliable and consistent cash flow that can live forever. And that's things like maximizing your Social Security and optimizing what your benefits are. Things like your pensions. That could be shifting money from risky assets to things that provide more predictable income. It could be, reliable income through higher dividends and interest, more fixed rates with how fixed rates are today, or it could be more reliable income through things like annuities. We're going to talk about things that could blow it up. I think a lot of the times when people come in and they have that fearful look, it's because something bad happened to them that brought them into the office. Maybe they planned on working for another 5 years, and unfortunately the company shut down or the job layoff happened and they didn't make it the next 5 years like they wanted to. Maybe it was they or a loved one had a healthcare crisis. Maybe they had to step back from work because they had to, deal with that. And so when we look at the risk management section, we're saying, what are the other types of risk that could impact the success of having enough money that lasts forever, like market volatility, inflation, somebody passing away prematurely, and how can we develop those risk management, giving you an investment strategy that you understand what the methodology, the process is, something that's tailored to your risk tolerance, but also is tailored to the amount of risk that you need to take to try to achieve your outcomes. We then bring in people like Scott and Troy, from America's Medicare Associates, and look at your healthcare planning. If you got to retire before 65, how do you get affordable healthcare? What does it look like when you look at 65, Medicare Advantage or a supplement, and then ultimately protecting you from a long-term care? Now, in a previous segment, you had talked, Dave, about some things that I think also make us fairly unique. It's not just getting you started, it's walking you through that entire process. So the other things that are really important for us is, one is our educational support. Some of our most popular events that we have would be like our economic summits that we do twice a year. But we also have these baby boomer basic classes that we typically teach like at Lourdes or Bowling Green State University, and it's the basics of retirement. But what we have is we have clients that'll come back out to them 2 or 3 times. It's like watching a movie, and after you watch a movie a couple times, you pick up a couple new things. The same is true with our educational support system that we have here. And the last thing that we do is regular monitoring and adjustments along the way, and then communicating that back to our clients with what those changes are going to have as we do the investment committee. And I think those are the type of things that we go through when we're looking at, how to help calm retirement concerns. Do you see, I guess, a lot when you're getting together with clients? I mean, they come in with these concerns like the commercial or the fear of outliving their income. Curtis, what do you say to people when you talk to them about those fears or concerns, and how do you put them a little bit more at ease?
Well, Nolan, I agree with everything you said about the fears and life changes and things like that. One of the biggest fears, I think everybody in this room, it doesn't matter what age you're at, we're in a hyper-connected world nowadays, Nolan. And so we've got everything at our fingertips. And so fear of missing out is a big deal for investors. Mm-hmm. They come in, they Google things, there's a zillion things out there. So helping them, before we even get into the numbers, let's define your priorities. Let's set realistic goals, because they don't understand. There's too much going on sometimes, So we meet with them and just address it. Focus on the personal growth that they need to get there.
Yeah, we do. We live in that society today where it's in your face, and you could get up and watch the news in the morning, and it talks about now's the best time ever to be invested in the market. And, I could go out to lunch, and by the time we get back from lunch, it could be talking about another article is today's the worst time ever. So no wonder it drives investors' fears, when you look at what the news can be out there and getting you off track with your decisions. What do you do when you're working clients through, dealing with their emotions when it comes to investing?
I think the important thing here is that a lot of anxiety starts once a client has made a decision about how to invest, where to invest, and what their anticipated income is going to be in retirement. Well, those aren't etched in stone. We try to build plans that have flexibilities built into them and give us the opportunity to make a pivot as an advisor for a client who needs to make a change for whatever reason. I would say that being able to be flexible, being able to educate, and being able to answer the client's questions and concerns throughout the process is the key to maintaining their confidence that we're doing the right thing for them.
Yeah, and so if you're listening, you kind of feel like maybe you're sitting out there on an island, or maybe you're worried, with it being an election year or the wars or whatever your concern is. And if you want a little bit of guidance, just know, again, we're a phone call away. We're happy to help walk you through that, just to be able to bounce some ideas off of and give you some guidance. And, today's what an uncertain world that we do live in.
There's a lot of things certainly to be concerned about out there in the market, and those feelings are valid. We're not going to minimize those by any means. But when emotions come into play, we've talked time and time again about the show. When you make emotional decisions, sometimes they are rash decisions. They are the incorrect decision. If you have a proper plan in place that takes into account the fact that, yes, the market is going to go up and down, and we're going to have elections every couple of years. It happens, and to hopefully account for these things if and when they do happen, so you can kind of stay the course. Hopefully, not avoid making these emotional decisions. But that's also not to say that things are set in stone. That is, a set it and forget it plan. When the market dictates, or whatever factors dictate changes need to be made, the team at America's Retirement Headquarters, they will be there to walk you through the process and figure out, what needs to be done right now, why we're going to do it, and how you go about doing it. But it all falls back on having a plan put in place. And the first step to do that is reach out, 419-794-3030. That is the website. The guys mentioned the events that they do throughout the year. Currently on hold right now as we come up on the end of the year. Got a lot of stuff lined up for the beginning of the year. But you can go to arhq.com, click on the events tab to find out when those events are coming up. You can also schedule a time to speak with them right now on the website as well, arhq.com. Rock icon Ozzy Osbourne will be the first to tell you his days, well, they are numbered. In a recent interview with Rolling Stone UK, Ozzy says he has probably about 10 years left to live following recent health challenges, including surgeries and a bout with Parkinson's. This is a tough admission for anyone to make. Guys, if somebody came to you with the same realization, can you help make sure their estate plan is set?
Looking at estate planning is extremely important. I think at all ages, you'd notice, I think, our advice to everybody when they come in the office, or everybody who's listening, you need to have your basic estate plans put in place. You need to have properly named beneficiary designations on things like your 401ks, your IRAs, your life insurance. You need to have the correct legal documents like a will, power of attorney, those supporting documents. They make a ton of sense. This even gets more important when you think of what I would refer to as late stage estate planning. Let me give you an example. I have this lady who came into the office. This was a couple of years ago. We'll just call her Sally. Sally had come into the office because her mother had fallen ill, and her mother was not doing very well. She was in the hospital, and it wasn't expected that mom was going to be here for a long time. And what Sally had come in is she came into the office because she had heard about the importance of having beneficiaries on accounts. And so what she did is she looked at her mom's large 401k. So this was like a $750,000 401k. And what she noticed is that her mother, Nancy, had not named a beneficiary on her 401k. Now, in this particular situation, Sally was the only child. So it would naturally make sense that she would have been probably who Nancy would have named as her beneficiary. She's the only child. And Sally also had to name themselves some beneficiaries on accounts. And so the laws have changed where you need to make sure that it's clear that if you're the power of attorney, you're able to do that and name yourself as a beneficiary if that's one of the powers that you want to have. Long story short, Nancy passed away. The entire account became a tax and probate time bomb. So, roughly half of the money was just immediately blown up because of the form of immediate income taxes, as well as probate fees, attorney fees, and let alone the headache that the daughter Sally had to go through in that entire process. We're on the flip end of the scale, dealing with hundreds of retirees. It's just, unfortunately, it's a natural part of our business that clients pass away. And, for a client, it's the first time they ever lost a loved one, a spouse. I mean, it's a traumatic experience. So whether it's providing our clients with the survivor checklist and or sitting down with them and walking them through the process and explaining to them and helping hold their hand through that process, I think that's where us as advisors, really earn a lot, is helping the family go through that overall process. And I can 150% tell you that I've seen the positive impacts of proactive estate planning has had on a family. And I can 150% tell you the negative impacts of families who've messed it up. So the way that we can help you is, one, double check your beneficiary designations. Two, look for ways to avoid probate. Three, make sure you have your wills, your estate plans up to date. And number four, get a prepaid funeral arrangement plan. It can help out a lot. And one of the things that we can help you out with is somebody who watches us either on YouTube or one of our podcasts or here, on Toledo's largest talk station on WSBD, is call our office and get a copy of the Ultimate Estate Planning Checklist. That Ultimate Estate Planning Checklist can take, what's my combined nearly 30 years of experience in figuring out where these mistakes happen, what to look for when you're looking at your beneficiary mistakes, things like where do you keep your passwords, because somebody's going to need to know how to go in and get that information. So that's something that we can help you with, whether it's the beginning stages of doing your estate planning or whether it's something, man, we really need to get this updated because a new health situations come up and it forces us to address this issue. That's what we can do when we take a look at it. What are the areas when you guys are talking with clients? What are the areas that you're talking with or you're talking with your friends or coworkers about when you're thinking about the terms of estate planning and advice that you give?
I was actually just cracking up here a second ago when he was talking about the 10-minute. I got to give a shout out to Fred. You know who you are. Started doing business with Fred, and every time I would answer Fred's question, he would ask me, is that in my 10-year plan? Because I'm dying in 10 years. And he just had a birthday, and so I had to check with him if it went down to 9, but he's still on the 10-year plan. And so it's made my job so much easier. I can serve him in a higher capacity and at a much higher quality for him and his family. Everything you said, I would say. And then on a personal side, I've seen clients get a lot of value from decluttering their life. Look, if you've got 2 kids, the kid that can't afford it is the one that wants your house. So start getting rid of your stuff, declutter that, and lighten the load. You do not want your estate cluttered when you hand that over, and that's part of the reason I brought it up. Estate clutter is a huge issue at the time that it transfers.
Yeah, I can think about another client of mine in particular. You talk about decluttering their finances. In her situation, she's still fairly healthy, but, in her late 80s, obviously at some point, mom's going to pass away. And so she had these investments kind of all over the place, some here, some there. Decluttering them, what we're able to do is able to kind of take and combine some of these accounts in one household. That makes it a lot easier for the kids ultimately when you're dealing with one versus multiple different companies when dealing with the overall estate planning. So I love the advice of decluttering your life as well. And again, we're not attorneys, so you're not going to have a clock ticking in the background with the legal fees, but you can get some advice on what we've seen with real life world experiences in dealing with this. And more importantly, if you just want to take that next step, give our office a call, get a copy of that ultimate estate planning checklist. This is an area where you get one shot at getting it right. So what you have in writing, that's how it's going to go ultimately when something happens. And so whether it's, late stage estate planning or whether it's something that you're new to doing estate planning, we're here to help.
And that's great. It's something, again, that can be accessible to you just by reaching out, giving a call, 419-794-3030. You can also go to the website, arhq.com. There are countless stories out there of celebrities who have estate planning mishaps. James Brown, Diana Ross, Michael Jackson, the list goes on. And it's not just because they are famous that these issues occur. It is, simply because they are famous. And so their name is in the spotlight. It happens every single day to people just like you and me. And it can be avoided just with a little bit of proper planning. Is it the easiest conversation to have? No, of course not. But it is something that could save a lot of heartache, I think, and a lot of headaches for your loved ones down the line. And it's as easy as getting a copy of that ultimate estate planning checklist and going from there. So again, 419-794-3030. That is the phone number, the website, arhq.com. It is a holiday staple in my house. But the movie Home Alone came out 33 years ago. One of the many memorable scenes, there are a lot of them, was when Kevin went through the grocery store checkout by himself.
Are those microwave dinners any good? I don't know. I'll give him a whirl. Hold on, I got a coupon for that. It was in the paper this morning.
Are you here all by yourself?
Ma'am, I'm 8 years old. You think I'd be here alone? I don't think so.
And it got me thinking, I don't actually know the last time I clipped a coupon out of the paper. Truly a sign of the fact that times have changed. And I know that, in all the years that you guys have been doing this, you've seen a lot of changes in your careers as retirement planners. What are some of the biggest ones?
There have been a lot of changes, and I would agree. I can't remember the last time I clipped a coupon out of the newspaper. I think I get the newspaper if my son makes it in there. Recently, he was in there in the Waterville newspaper for winning a hockey tournament, which is pretty cool to see the Anthony Wayne team in there. But, when we look at some of the biggest changes in retirement, there's a lot of them. And the problem is if you don't keep up with these rule changes, or if you don't work with a firm that helps keep you up with these rule changes, you could be missing out. You could be missing out on a lot of opportunities. This can go on for a long time. For one, I think the example would be for most financial products, the trend in the industry over the years has been costs has come down. I met with a gentleman named Larry recently and got together with Larry, and we did the portfolio analysis like what we do with everybody. And what I had noticed is that Larry had bought an annuity from, like 20 years ago. And this annuity over the course of time has grown and done well. It's gone up like the markets because it has market exposure. But, what I had pointed out to him is that he was in this contract that to me had 20-year-old fees and expenses. So it had a high mortality expense ratio. It had high sub-account fees. It had, riders that were like his death benefit that are really going to provide him no value because his account was worth more than what he put into it. And when you add these fees and expenses up, it was costing him, I think, in the neighborhood of $30,000 to $50,000 a year of wasted expenses when you started pointing all these things out. Because the retirement changes today are most financial products, not all, but most financial products, generally speaking, the cost structure has come down when you look at things that are in the marketplace today. So if you have some older products, think of it like an old car. Old cars are cool. I love old cars. I have a couple collectibles myself. But, the new features that are available on new cars are dramatically different, as well as some of the cost structure is different. So look at your old contracts. The other thing that rules are changing is one is required minimum distributions. They keep changing the year on when you have to take a required minimum distribution out. And this is one of those areas that it's probably one of the biggest penalties that I'm aware of. So, failure to take the required minimum distribution can result in a 50% penalty of the amount that you're supposed to take out. So I can't think of a bigger penalty than that. The other area is if you have money that's left over and you want to pass it to like your children or what's called non-spousal beneficiaries, the government has done away with what we used to refer to as called stretch IRAs, meaning they can no longer stretch out the taxes over their lifetime. And they've changed their rules the last couple of times as well. We had this conversation in our investment committee meeting, and one of the things that Chaz, a regular here on the show, talked about was how traditional asset allocation is much more correlated today. You have to get somewhat creative on how you're putting together portfolios in today's environment because what worked in the past may not work today. And he pointed out a good example of that is in 2022, you had both the stock and the bond market did absolutely terrible, where normally if stocks go down, bonds go up because of the non-correlation. It points out that things today can be much more correlated. Things that happen overseas can impact, the U.S., and that becomes correlated. The things that I love is I love the fact that technology makes it a lot easier to try to increase the odds of being successful. Also, to be able to identify weaknesses in a portfolio. We have software that we use, and I know that you've put it into your practice, but what it does is it allows you to create an investment policy statement for a client. It really helps you kind of pinpoint the level of risk a client's going to have in normal market conditions. You can identify what is the typical range of returns, which results in, how often does the client win versus lose in the win-loss ratio. It gives you those statistical numbers that allows you to try to optimize the portfolio to achieve better results. And, I'd love some feedback on what you're doing with that. But before, the final thing that I would say is the other thing that's different right now in this environment is I would say fixed rates are back, baby. Mm-hmm. Fixed rates are back. And, when we think about it, it's the highest that it's been since my children have been born. So it's been decades that we had this record level high. And so, for a retiree may now be a perfect time to build up your backup plan, to reallocate some money into some of those higher fixed rates accounts and, and lock in some of the higher rates because, as the Home Alone movie pointed out, we're not clipping coupons. And the last time I saw my grocery bill was significantly higher than the first time I saw Home Alone. So things are getting a lot more expensive. But what do you guys see? What do you think are the different changes that you're seeing, Jeremy, when it comes to retirement today?
I think technology is really one of the biggest ones. I think one of the things that separates how we look at financial planning hasn't changed much. I think we're unique to the fact that we get together with folks and see, number one, if we can help them, number two, if they want our help, And then the second step is kind of gathering that information and putting together that data in the Riskify software you mentioned. And then we can put together a financial plan, and which really itemizes what their goals and objectives are and how we see those things kind of coming to fruition. And I think the technology definitely makes that much easier, where the process is still kind of the same, but it's able to be sped up by the amount of technology that's available to us.
Fellas, I just want to say I used a coupon about 3 months ago. I think you're leaving money on the table. You might want to reconsider your priorities there. No, biggest changes, definitely technology. Look, what we're trying to say, with the Chat GPT and all this crazy technology coming out, we're as close to having a crystal ball as we've ever been. But we can't predict the future. We don't know what's going to happen, but we can run it against what would your portfolio look like in COVID, right? We can run it against things that have happened and really tune it in to meet expectations, which is what everybody's scared of, not getting what you're expecting. So that's the power that the technology is really bringing to the table. And so that is a huge change that I've seen. I always focus on being tax efficient. So just always like letting everybody know you can bump up your Roth contribution coming up too, just a little bit. Other than that, great job, gentlemen. I think you covered most of it.
In all fairness, I did use a coupon over the holiday season, but it was a digital one on my phone, so I didn't cut it out of the paper. It's a little bit different. And to focus back on what Nolan said there, Kevin's bill during that grocery store run was $19.83. I did the math because working with you guys has made me do this. This year, that same grocery list would have cost $72. So the times have certainly changed. You want to make sure your plan changes accordingly when necessary, not making changes for the sake of making changes, but knowing, again, when those moving parts need to happen. And that is the beauty of having a plan with the team at America's Retirement Headquarters. Not set in stone, can move when necessary, but it comes back to, once again, having that plan to get started. 419-794-3030, or go to the website, always available day and night, arhq.com. We're going to shuffle the seats around one more time here. And guys, I don't think this has ever happened before. We have got the Baker boys, the fabulous Baker boys, not one, not two, three of them. Nolan Baker, Jeremy Baker, Andrew Baker, all here on the show. Again, the number 419-794-3030, online, arhq.com. And we hear stories about how the stock market generates 7 or 8% over the long term. Well, what is the long term exactly? Market Watch went back to 1967, and they said that if you had $100,000 and just let it grow, today you would have $2.3 million. That is a 5.7% annualized return over 56 years. The whole point of the article was, you can't just depend on the stock market. You need to find other ways to grow your money. But the question remains, where can you find returns of 5% without that market risk?
Well, I mean, if you look at it, I think we're in an environment where there's so many great opportunities out there. There's multiple different choices. Again, it depends upon, what your length of time is, what your goals and objectives are, and how you can apply it to your situation. But this is, again, with Andrew, the rates today are the highest that they've been since you've been born. Being in your 20s, it's amazing how high that we've seen interest rates go. It really hasn't been since you were born that we've seen this great of an opportunity. And one of the things, if you're listening and you have lazy money, if you're, tired and frustrated that your bank only pays you a minimal amount of interest, yet they turn around and charge you nearly double digits on your car loan or your credit cards, they're charging you double digits, but they've been slow to bump up your rates. That's where you want to be proactive on making your money work as hard as possible, because there are a lot of opportunities where you can find 5%. As of the date of this recording, again, the end of 2023, without all of the market risk. So first of all, what I want you to do is I want you to look, or we can help you search out various money market funds that are out there. So there's something that's called money market accounts. There's money market funds. Some investments are backed by FDIC insurance. Some investments are not. They're backed by the institution that they're with. For example, if we look at it, some of the top name companies that are out there, if you think like, Vanguard, Fidelity, and Charles Schwab, their money market fund, a lot of these funds are over the 5% range. And with a money market fund, it allows you to put money in. Every month I get money deposited on the interest that I have added into the account. And as I need to take money out for other things that come up in life, I can just, take money out. So it's a short-term investment. With my money market fund, it also will typically change rates. Usually mine changes about once a week. And so it can be a short-term liquid option. And if you believe that interest rates are going to go up, that rate would likely go up. If interest rates go down, that rate would likely to go down. We did a segment earlier today where we were talking about T-bills, and we were talking about the ins and outs of how Treasury bills work. If you missed that segment, or in fact, if you missed any of the segments that we talk about here on our show, you can just go back to our YouTube channel, type in America's Retirement Headquarters on YouTube, and we'll be able to get you that segment, be able to show you all the other segments. But, with the Treasury bill, you can get that directly from the United States Treasury Department. You can buy T-bills as of now that range anywhere from 4 weeks to a year, and those T-bill ranges are in that 5% range. Good old FDIC-insured CDs are also another great option. When we look at FDIC-insured CDs, if you're looking at the CDs, to me, I think in the marketplace that I see is that, anywhere from 6 to 2.5 year time frame is kind of where the sweet spot is for the FDIC-insured CDs to get some of the rates that are in the 5%. And the last thing is we look at a lot of the fixed rates that are offered by the insurance companies of America. And Andrew, I know, as one of the fixed rate specialists here at America's Retirement Headquarters, it's an area that you kind of take a look at, you talk to people about, you kind of go through. And wouldn't you agree that these rates are also pretty competitive in the marketplace environment today too, aren't they?
I would agree with that, yeah.
And so with the fixed rate investment, where these can be very attractive is building out what I would refer to as a laddered type portfolio. In a laddered portfolio, it's maybe money that you don't need for 3, 5, 7, or 10 years, or in fact, you don't need all of the money. When we look at this, there's a great tool that you can use going back, looking at technology, and one of the ways that technology has dramatically improved. Mm-hmm. In the good old days, I might have to call all over town. I might have to call all different insurance companies to get rates. Now with computers at the touch of your fingertips, in this particular software, you're able to search 480, nearly 500 companies' products to find out what the rates are. And in a quick hurry, doesn't it give you the ability to find out different rates for different time frames, what the insurance company ratings are, the ins and outs, ways that you use this product? How do you use this tool when you're helping people search out some of the top rates that are out there?
I would say I will use all the filters to determine how long of the investment they're looking for, and then it'll show me all the different companies and different rates and different products.
Yeah, so you might have an investment, maybe you bought 2, maybe 3, could be something 5, maybe it's something that's just sat around for a long time, you haven't given it much thought. What I would tell you today is that, again, now rates are dramatically higher than where they used to be, and it is indicated by the Federal Reserve. They indicate that their plan is to stop raising rates, and in fact, maybe turning to lowering rates. So this could be your moment of time to be able to lock in rates with how competitive they are. There's multiple different solutions when you're looking at over 5% interest. The question becomes, how long do you want to lock in these great rates? I met with an older couple, and they said, I don't even know if I'm going to live 10 years. Why would I want to lock in that rate for 10 years? It's because maybe they will live for 10 years, and if they don't, it could be something that they leave to their surviving spouse, so spousal takeover. Could also be options for the kids, and a lot of these contracts, even the kids can stretch them out over a period of 10 years. So there could be some good choices. But Jeremy, when you're looking at the fixed rate environment today, what is your opinion of, the places on where you can get these high interest accounts?
Well, I think there's a number of places, when they ask, where can I get 5% nowadays? Seems like everywhere. Money market accounts are above 5%. Fixed annuities are above 5%. But like you mentioned, it's about shopping out the right products with the right companies and then making a decision based on that.
So plenty of different choices that are out there. So if you're listening and you're wondering what could possibly be the best rate that I could get for my short-term money, what could I get maybe over the next year or two? Or if you want to say, how can I just lock in and not worry with all this market risk that I have anymore? It could be your perfect time to give us a call. I know Andrew here at the office, Jeremy, and even myself can help answer the questions about where can you make 5% on your money, and also talk you through, how to build out a portfolio that gives you the liquidity features on what you're looking for, plus gives you the options and the strategies. And it's one phone call versus having to call all over town or look all over the internet. Just one phone call to make, and that's all you need to know.
And that phone number to do that, 419-794-3030. Again, 419-794-3030. You can also go online, arhq.com. You can find out more about the team there on the website. Just click on, the meet our staff section, find out more about the team. Go and schedule a time as well and start putting a plan together for your retirement goals, because that's what's most important, your retirement goals. Again, arhq.com. Guys, thank you so much for the time. And as we wrap up, I want to leave you with the final word.
Yeah, I just say, as you think about the holidays, just take a moment to, be thankful for those of you that have some friends and family around you. Remember those that maybe couldn't be with you, and just realize that we at America's Retirement Headquarters are thankful for you. We're thankful for your listening. We're thankful that you come out, and we appreciate you and wish you all the best of success in 2024. And so just remember, when you think retirement, think America's Retirement Headquarters. It's home of the Retirement Guys formula and America's Medicare Associates.
America's Retirement Headquarters is located at 1700 Woodlands Drive in Maumee, Ohio. You can reach them by calling 419-794-3030 or online at americasretirementheadquarters.com. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. Nolan Baker is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Please consult with your attorney, accountant, and or tax advisor for advice concerning your particular circumstance. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Nolan Baker, Ohio Insurance License Number 27787.